From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Kaylee Lines, I'm Joe Matthew.
President Trump says the market reaction to his new tariff regime is, quote, going very well, even as stocks tumble on the heels of his announcement, wiping out $2.5 trillion in market value. Investors rushing for Treasuries as a haven, sending the 10-year yield below 4% for the first time since the election.
And as Canada announces new retaliatory tariffs against the U.S., we'll bring you an important conversation on the political implications of all this with New York Governor Kathy Hochul, as well as insights from Andrew Hale at the Heritage Foundation.
And as some Republicans join Senate Democrats in pushing back on the president's tariff plans for Canada, we'll have more with Republican Congressman Tim Burchett of Tennessee.
Thanks for being with us on the Thursday edition, the late edition of Balance of Power here on Bloomberg TV and radio. The day after President Trump announced the tariffs, he was asked about the market's response to his tariff regime. Here's what he had to say.
I think it's going very well. The markets are going to boom, the stock is going to boom, the country is going to boom, and the rest of the world wants to see, is there any way they can make a deal? They've taken advantage of us for many, many years. For many years, we've been at the wrong side of the ball, and I'll tell you what, I think it's going to be unbelievable.
The president after that spoke to reporters on Air Force One, describing the markets as the operation now being over. And now, quote, we let it settle in. But it certainly didn't seem to be settling well in a chaotic day on Wall Street today, at least. Bloomberg's Romaine Bostick is in New York for us. And Romaine, there was basically nowhere to hide aside from the bond market.
Yeah, you pick a sector. It was pretty much down here. Obviously, retail really took it on the chin. You had names like VF Corp down almost 30% on the day. In the technology hardware space, Apple down 10%. Dell was down about 17%. And a lot of this has to do with the idea that you have, A, companies that are exposed to the foreign supply chain. Those same companies also selling a lot of goods here in the U.S. So not only are they exposed to the tariff risk of trying to import goods, whether it's finished goods or components into the U.S., but if there is an economic slowdown, they're now faced with the prospect of a slowdown in consumer spending. You add it all up together, and what did you get? The worst day for the S&P since the onset of the pandemic. Worst day since June of 2020. You have the S&P back in correction territory. The Russell 2000, which tracks small cap stocks, that's now in bear market, meaning it's down 20% from the all-time highs. And it wasn't just sell-off, wasn't just confined to what was going on in equities. You saw a lot of other asset classes move lower on the day. You had some buying in the Treasury space, which pushed yields lower by the most that we've seen in months. In fact, that 2-year yield now down back around that 3.6 level. A 10-year yield back down briefly below 4%. And of course, you had a huge drop, Kaylee and Joe, in the commodity space.
Yeah, oil certainly not being helped by OPEC today, and you've layered the tariffs on top of that. Bloomberg's Romaine Bostick, thank you so much. And we want to have more on what exactly commodity markets, the bond market, and the stock market were reflecting today, which, of course, is concern about the economic impact of these new tariffs. Bloomberg's Amara Omeokwe is joining us now in studio for more on that. So obviously, it's kind of unknown at this point just what the economic ramifications will be. But economists are revising down their growth forecasts, hiking their inflation forecasts. Everybody is suggesting it's at the very least not going to be great.
Not going to be great. And I think a lot of talk among Fed watchers today was, does this put the Fed in a really difficult position? Are we going to be in a place where we continue to see elevated inflation, but we also have lower economic growth? We also have a slowdown in the labor market. And in that case, what would the Fed do? We heard from Vice Chair Philip Jefferson today and Fed Governor Lisa Cook talking about how all this uncertainty kind of means that it's okay for the Fed to be on hold right now as they ascertain what's going to happen. But the question is, if we're in a stagflationary environment and the Fed is pulled in different directions, what do they do?
How does data tomorrow affect this? 8:30 in the morning, will we see Doge start to creep into jobs data?
I don't know if we'll start to see Doge creep into the jobs data quite yet, but I think the jobs data becomes really important here, right? Because the Fed has made it clear they want to get inflation down to 2%. But if we see the labor market really start to crack under the weight of some of these cuts, under the weight of these tariffs and the uncertainty that it's bringing, then that means the Fed might be put in this difficult position. Chair Powell's going to be talking tomorrow, and all eyes are going to be on him to see how he's thinking about this, right? is he going to still be leaning into the idea of transitory, that the Fed perhaps can look through these tariffs because it's a one-time increase in the price level? Yeah. Is he going to say the Fed can continue to be patient? That's what people are really going to be listening for tomorrow.
Tomorrow should be something. Bloomberg's Amara Omeokwe helping us cover it all here in Washington. Thank you so much. As we turn to Bloomberg White House reporter Josh Wingrove, who has helped to spearhead our coverage of this tariff regime since it first started coming together. We actually have details to talk about today, which is pretty interesting.
The puck anymore, Joe.
Well, that's right. What did you think of the president's reaction to how well things are going on Wall Street?
I wonder how much more surgery this patient is going to need, because he keeps using that analogy. And so we'll see where it goes.
Look, it's like the $6 million man.
That's right. They're trying to put a positive spin on it. But obviously, there's a lot of red in the markets. There were several examples today of senior members of the cabinet going on TV and putting on a brave face as the display of the show they were on showed markets like ticking downward aggressively, comment by comment. So I think right now Trump's whole argument is that this is no pain, no gain, and he's not shaking in his boots. But I think obviously the question is whether he's willing to open the door. So some of the comments that have just hit the terminal now from his discussion with Air Force One or reporters on Air Force One is that he's willing to talk about reducing tariffs if there's, quote, a phenomenal offer from another country. And so, that is a bit of a crack of the door that wasn't necessarily there. Although I should note, and we've got some great reporting from our colleagues earlier today on this, the way they've structured this is like 10% is a pretty hard floor. So there are countries out there that think the 10% is an insult. They're kind of right in many cases because they have either equal trade or even a trade deficit themselves with the U.S., which Trump loves.
Yeah.
It doesn't look like there's a lot of wiggle room to get under there. So right now, where do you go? Where do you go from here? So, I should also note we do have more tariffs coming down the pipe. I think people are missing this a little bit. It's like not done. Mm-hmm. And they signaled yesterday that they're still proceeding with semiconductor tariffs, the lumber tariffs, as well as added critical minerals. I'm missing a couple off the top of my head here, but the critical minerals one kind of popped up as a potential new one out of nowhere, or at least more forward-looking than it had been. So he's going to keep his foot on the gas. The patient is an outpatient, and we're going to see. But the issue, of course, here is there weren't a lot of people that don't work in that building that thought this patient needed to go into surgery in the first place.
All right, Bloomberg's Josh Wingrove, thank you so much. It's been a marathon few days for Josh and our colleagues on the White House team. And still ahead here on Balance of Power, we'll look at how New York is bracing for the impact of President Trump's global tariffs. Its Democratic Governor Kathy Hochul will join us next on Bloomberg TV and radio.
Reciprocal. That means they do it to us and we do it to them. Very simple. Can't get any simpler than that. This is one of the most important days, in my opinion, in American history.
President Trump announcing steep tariffs on all exporters to the U.S. yesterday, with rates ranging from 10% to over 50%, which his administration says aimed to counter large trade imbalances with other countries. But the levies are also expected to have consequences here at home. And for a look at how individual states are bracing for them, we turn now to the Democratic Governor of New York, Kathy Hochul. Governor, thank you for joining us here on Bloomberg TV and radio. I'm curious what you're already hearing from businesses and companies in your state and whether they are already suggesting they are making changes on hiring practices, on pricing, for example, or if they are playing wait and see here to see whether or not this actually sticks.
No, thank you for having me. No, the impact is immediate. I mean, this is nothing short of the largest tax increase in Americans' history. And the impact on New York, let me explain. This is the 10th largest economy in the world. We have Wall Street. We have farms. We have a border 450 miles with Canada. So we have a trade relationship with Canada over $50 billion. So already, here's what we're seeing. Droppings in bookings from Canadians coming to New York State, a huge source of tourism all the way to New York City, but certainly in my hometown of Buffalo, where Canadians come over all the time, and they go to our sporting events, they shop in our stores. So here's number one. Sales tax revenues are dropping already. Now, speaking to a farmer in a very Republican part of our state, I'd call it Stefanik country in the North Country. He told me that as a dairy farmer, he gets his shavings, he gets his fertilizer, he gets all these products from Canada, and his costs are going up $10,000 a month, a dairy farmer. Not the total cost, but an increase of $10,000 a month. So there's such anxiety now, not to mention the Walmart mom who goes to Walmart like I did when my kids were little, that giant grocery cart with the oversized diapers and lots of baby food and paper towels. That's going to have an impact on people shopping at Walmart who come out of the trailer park like the one my parents grew up in. So I have to say, it goes all the way from Wall Street to the farmers, to the small towns, Main Street to Wall Street. There is a cataclysmic effect on this, and New Yorkers are reeling right now.
I hear where you're coming from here, Governor. I wonder if there's a silver lining in any of this for the great industrial towns of your state from the last century. Syracuse, Rochester. Based on what we're hearing from this administration, they will again have a seat at the manufacturing table. Do you believe that?
I hope so, but we already have advanced manufacturing coming to New York. I literally got off the phone with someone who's in a pharmaceutical business looking all over the world, and he's very likely, with the deal I'm making, to come to New York. So we have advanced manufacturing, we have pharmaceuticals. In fact, I was able to lure Micron with a $100 billion investment, the largest in our nation's history, to build semiconductors in the Syracuse area. So we're already reimagining our economy based on manufacturing. So that's important to me. I come from Buffalo. I mean, my dad worked at the steel plant. I know how hard it is when businesses leave. But we are backfilling in with businesses that we think will have a long-term future, and they'll be affected by this. The component parts to what they're building and the supply chain, they're going to see an increased cost, not just because they're in New York, but because they're in America. And that's what worries me. There could be a silver lining, as you say. I don't know how old I'm going to be when that happens. I mean, what are they going to do? Start building factories now? And, I just don't know. All I know is that people were promised lower prices on Inauguration Day, and guess what? They're going up.
Well, is there anything you can do about that, Governor, regardless of what policy is set by the federal executive? You as a state executive, are there levers you can pull to help offset any economic pain that results from these tariff policies?
Well, I've had to have this conversation. I'm assembling some of the smartest economists in the country to help give us advice on this. This is an unforced error. This did not have to be this way. And yes, you can use tariffs as a tool to negotiate or, have something in moderation. But this is so extreme and so immediate that I need to figure out with some real experts on what this is going to do. But I'll tell you what's going to happen. Wall Street goes down. Next January, when I'm looking at my revenues that are coming in from Wall Street bonuses, where I fund a lot of the generous programs we hear in our state, that's going to be lower. I'm going to have to look at where we're going to have to cut there. I have to look at the whole picture now in the context of the budget I'm negotiating, the revenues I count on, the revenues I'm going to lose, but also the impact on our businesses who may not be expanding now. So I have to find ways we can use state resources to say, we'll help calm it down. What I can do for a farmer in upstate New York, that's a good question. I don't want them to suffer. 32,000 farms in our state. People think of New York as just Manhattan. I know they do. But it's so much more than that. An important part of our economy is our agricultural sector. So all of our sectors are going to be hurt. So I have to look at our budget, what we can do to help, other incentives for economic development. And as I'm trying to put money back in people's pockets. I mean, the average New Yorker will have $6,000 less in their pockets because of these tariffs, and that's an opinion by a number of economists. I have a budget I'm negotiating right now that puts $5,000 back in people's pockets. Child tax credits, a middle-class tax cut, the largest in 70 years, the largest tax rate decrease in 70 years, an inflation rebate for people who paid so much more in sales tax. So I have a path to put all this money back in their pockets. You know what's really sad? That's going to be sucked right out with the $6,000 they're going to lose because of tariffs. So I'll keep fighting. I'll keep doing what I can do. But this is a real hit on New Yorkers.
So it sounds like the potential for state tax cuts in the year ahead depend on tax receipts from Wall Street, Governor. Is that right?
Oh, it always does. I mean, I've not had an increase in our income tax because I want to make sure high net worth people know we appreciate them, and I don't want to drive them out of our state. So that's my view. But
does it increase the urgency behind extending the Trump tax cuts and eliminating the SALT cap? Because a lot of Republican members of Congress in your state are working to do that now.
Well, they better be successful. We want to make sure that the SALT deduction, state and local tax deduction, is brought back 100%. Absolutely. And I have 7 Republican members of Congress. You better win on this one because you promised your voters you would.
Governor, before we let you go, our time is short here, but I do want to ask you about New York City Mayor Eric Adams, who, of course, had charges against him dismissed. He now says he will continue his mayoral campaign for re-election, but as an independent, during the height of that controversy, you said it will be up to the voters to choose who they want to be mayor. You opted not to force him out of the position. Even if you're not going to endorse anyone, would you encourage New Yorkers to reconsider a vote for him as an independent?
All I'm going to say is my job is to work with whomever's in the White House. I have a relationship with Donald Trump based on our mutual interest in building infrastructure and working on projects like Penn Station, but not allies when I don't support many of his policies. Same thing with the mayor of New York. No matter who is sitting in that seat that the voters of New York decide they want me to work with, I will do that. But always stand up for the rights of the entire state and focus on my agenda of affordability and public safety.
It's great to have you with us, Governor. Come see us again. New York Governor Kathy Hochul with us on Balance
Will
of Power.
do. Thank you.
Straight ahead, Wall Street economists are predicting a recession this year, due in part to Donald Trump's tariff announcement. We'll dig into the fallout from yesterday's Rose Garden event with Andrew Hale at the Heritage Foundation next. This is Balance of Power on Bloomberg TV and radio.
What CEOs are thinking about is finally, let's think about building in America. You've got almost $5 trillion of commitments coming to America to build their factories. That number's only going to grow as people realize it's time to bring manufacturing home to America, where the greatest economy and the greatest market is in the world. You're going to see great growth from America.
Secretary of Commerce Howard Lutnick this morning on Bloomberg saying that he believes the new tariffs will ultimately lead to growth in the economy. We now turn to how global economies are reacting with the help of Andrew Hale, Senior Policy Analyst for Trade Policy at the Heritage Foundation. It's great to have you back. Andrew, Donald Trump posted on Truth Social today, "The operation is over. The patient lived and is healing." How long will it take to heal?
Well, I think what we need to ask ourselves is what was the methodology behind these tariffs, and how do we actually even calculate for the calculation of these tariffs? I mean, they didn't actually calculate tariffs rates and non-tariff barriers yesterday, as they said they did. Instead, for every country, they just took our trade deficit with that country and divided it by the exports to us. And that's not what we were promised. It came as a shock to me. And, you know, our trade deficit is the flip side of a demand for assets. Instead of exchanging export goods for import goods, we make financial assets. I mean, we all seek for investment, yet some derive the trade deficit. So to put it very simply, if you have a capital account surplus, you must have an equal and opposite sign current account deficit. And most of the current account is in trades and goods and services. And I'm really quite concerned because these duties also harm America's global leadership. It undermines our progress in establishing resilient supply chains in the region and outside of China, which we want to have happen. And you have to give businesses and industry time to do that. I mean, just to sort of surprise us the way they did and announce and say, this is happening, you know, in 48 hours or so. I mean, that's a huge shock to industry. And we've already seen what's happening. You know, we've seen, for example, today, Stellantis has announced the laying off of 900 workers. So again, I think that we need to talk about what effect this will actually have on the U.S. economy. I think it could be quite grim.
Well, so it sounds like you don't have a great view of this, obviously. Is it your anticipation, Andrew, that if this regime is left in place, that actually it will have more detrimental effects to American manufacturing than positive ones, as the president is suggesting, is the point here?
Well, the tariff levels from these new tariffs take us back to the highest levels of protection in the U.S. in over 100 years. And we may very well get a recession. If these tariffs are maintained, We will get a recession as well as high inflation. I think we'll get major victories for the Democrats in just a year and a half time. We'll get interconservative warfare amongst the conservatives. And I think it has the potential to derail President Trump's entire agenda of border security, tax cuts, the DOGE. Those things will start to matter less politically to people as they start to experience this pain. And it could actually adversely affect, his entire MAGA base. So I'm quite concerned.
This is kind of remarkable to hear you talk, Andrew. A lot of people associate the Heritage Foundation with helping to guide the administration toward policy goals. We've come a long way from Project 2025. Have you transmitted your thoughts here to the White House?
Well, the Project 2025 was a coalition project of over 110 conservative organizations, the Heritage Foundation being one of them. We wrote about 30% of that book, and there were two chapters. One was a protectionist chapter written by Peter Navarro, and one was a free trade chapter written by Ken Lastman. So we didn't actually.
You know where I'm coming from, though, Andrew. Once you lose the Heritage Foundation, what else have you lost as a Republican president?
Well, we've been a free trade organization for 52 years. But I think actually, with regards to this, I think just everyone, whether you're conservative or on the left or right, just businesses in general, they're asking everyone said to me, where is this going to land? Whether we're diplomats, or whether we're journalists, or whether bankers or business people, SMEs, big multinationals, everyone said, where is this going to land? And business and banks and markets need clarity. And we need some sort of plan. And even if you don't agree with the plan, we can work with it. We can find a way to work around it or work with it, even if you don't agree with it. And we didn't get that yesterday. I'm afraid yesterday what we got was, there's also an element here which really quite concerned me. There was an element of incompetence that needs to be, I think, addressed. That list, I'd like to know who actually created that list. For example, they listed the Heard and McDonald Islands, which of course have no human habitation, has penguins. What are you going to do? Are you going to sort of, tariff the penguins and their manipulation of their pebble currency? There was also the British Indian Ocean Territory on there. And that is at least the United States. It's a U.S. military base. You have U.S. servicemen and women there. They have a commissary there with U.S. goods. I think the person who needs to create that list, whoever vetted it and whoever presented it to the U.S. public, I think they have some questions to answer because the president, that was unfair to the president. He needs better advice, and I think the American people deserve better as well.
All right, Andrew, we appreciate your insight. Also, thank you for making sure the penguins worked their way into this conversation. Andrew Hale, Senior Policy Analyst for Trade Policy at the Heritage Foundation. Thank you very much. And coming up, we'll continue the conversation on the president's tariffs and get the view from Capitol Hill. Republican Congressman Tim Burchett of Tennessee will join us straight ahead here on Balance of Power on Bloomberg TV and radio.
We are a couple hours in. The president announced this yesterday afternoon. We knew that there would be some of that as people are adjusting, but at the end of the day, yesterday marked step one. This will be a short time of uncertainty, and then we'll move back to the prosperity that this president has envisioned, that he is so bold and so willing to fight for.
Agriculture Secretary Brooke Rollins a bit earlier today on the market reaction to President Trump's reciprocal tariff announcement. Back with us now is Bloomberg's Romaine Bostick in New York following a heck of a day on Wall Street. Romaine, what's got your attention?
Absolutely. I mean, correction territory for the S&P 500, bear market territory for the Russell. And I want you to take a look at tech stocks because remember, Joe, last year, the Mag 7 as a group basically accounted for like 60% of the gains in the S&P 500, even more than that back in 2023. This year, they've done nothing. They got decimated today. You had names like Apple down 9% on the day, Nvidia down about 8%, Amazon down 9%, even Tesla lost about 5.5%. On a year-to-date basis, it's no better. All of those names deep into correction territory. The Mag 7 as a whole in bear market territory, down 24% from that all-time high. And there's a big concern here, Joe, is those names, people weren't just buying them just for fun. The fact is, those names had the best cash flow, the best profitability, and quite frankly, they were a mature companies with proven track records. So everyone gravitated to them. But for some reason, over the last few weeks, we have not seen that gravitational pull to those names. Maybe it's because of higher valuations. Maybe it's because a lot of what sort of buoyed those companies over the last couple of years was stable consumer spending and stable business spending, both things now that appear to be under threat given the new tariff regime that was unveiled yesterday.
So maybe no gravitational pull toward those names, but certainly gravity came for oil today, dragged down 7% on WTI, Romaine. Is that about tariffs, or is that actually more of an OPEC story that just happened to coincide with everything else today?
It was both. It was a 1-2 punch. I mean, the tariffs had certainly taken the wind out of the sails of some of the uptrend that we had started to see in price. And then OPEC came out and kind of surprised folks, saying that it was actually going to be willing to increase production by about 400,000 barrels. That may not seem like much, but the market had been pricing in about a third of that increase. So you had a market taken by surprise by two things: the tariffs that could be an economic drag globally, and now the idea of more barrels of oil coming into the market, which in theory would depress prices. You saw a huge drop today in Brent crude as well as WTI crude. And it wasn't just oil, Kaylee. You have a Bloomberg terminal. You type in BCOM index, BCOM, that's the main Bloomberg index that tracks the broader commodity sector. That was down 3% here on the day. 2.5%, on the day. We'll just round it up to 3, Kaylee, so I get it right there. That's the worst day going back to December of 2022.
All right, Bloomberg's Romaine Bostick, thank you so much. And while risk assets, as Romaine was just running us through, were selling off today, investors were seeking haven in Treasuries. The 10-year benchmark actually at one point that yield falling below 4% for the first time since October. And joining us now for more on that is Bloomberg's Carter Johnson. So, Carter, we heard from President Trump on Air Force One earlier, actually saying he liked what he saw in terms of interest rates coming down today. But arguably, this wasn't coming down for the best reason.
Thanks so much, Kaylee. And yeah, you're absolutely right. I think what we saw from the bond market today was really flashing red on growth worries. There's been such a push and pull this year between inflation fears being too high, growth fears being low. And I think what's clear that we saw today after the tariff announcement was in the bond market, in the Treasury market, these really strong growth fears are really picking up. That's sort of winning the day for now in the bond market. And as you mentioned, that was enough to push 10-year yields down below that 4% mark for the first time since before Trump won back in November. And of course, that's sort of a pretty critical level. The 10-year yield is a benchmark for all sorts of borrowing across the world, from corporate borrowing to mortgages, really pretty much touches everything. Yeah.
If this continues, Carter, what could this mean for the mortgage market and for housing at large?
Sure. I think that's sort of the big question, is at what point will we see this flow through to mortgage rates? And that is a big question. I mean, I think we've seen obviously a lot of choppiness, a lot of volatility. And so it's interesting because we're seeing these yields fall, but is that sustainable? Should we start to see some inflationary impacts from tariffs once they do sort of get going? Fed is going to be in a really, really tough spot. So I wouldn't say necessarily, rates on mortgages are sort of fundamentally going to be lower from here on out, but more so just that this reflects a lot of the sort of jitters in the market. And that inflation worry has not gone away. So the Fed is in a really, really difficult spot.
Bloomberg's Carter Johnson. Thank you so much, Carter, for the insights on an important day on the markets now, as we now take a look at how lawmakers are reacting to these additional tariffs now that we've had a chance to sleep on this. Gauge the market reaction. Republican Congressman Tim Burchett of Tennessee joins us now. It's good to see you, Congressman, and thank you for joining. The president said on Truth Social, the operation is over, the patient lived and is healing. Is that how you see it, or did the patient just die in a trade war?
No, I don't think so. Under Biden, we had a day where we dropped about 600 points and everybody just called it a correction and nobody blamed Biden. And under this deal, people there's going to be some hurting. There's no question. I'm not a drinker. I talked to some of my friends in the alcohol business and the very fine line of profit in the wine business and how that's going to be affected. I talked to some other people that thought they're going to be affected negatively. And as it turned out, they were not affected at all. So I think it's a little bit hit and miss. But overall, we have to realize that these foreign countries have taken advantage of America primarily through a gutless Congress that refuses to stand up to folks like China and other people that continuously dump on us. And we have a very short memory. I don't own any individual stocks anymore, and they're all in a mutual fund. But I think recent memory serves me pretty correct, when Harley Davidson was being dumped on by the Japanese market, they were dumping 1,000cc motorcycles and above into our market that were cheaper than they could make them. And they literally were about to run Harley Davidson out of business. And what did Ronald Reagan do? He put a tariff on 1,000cc bikes and above, and it allowed Harley Davidson to get back into the game. And then they end up going public and then very profitable. Of course, now they've gone woke and they're hurting again. But the truth is that those type of things are done, and it can cause a positive result. And I'm hoping that's what this does.
Well, Congressman, to go back to your point on a gutless Congress, though, isn't this technically your job as a legislator? Is it not Article 1 of the Constitution that dictates it is up to you and your colleagues in both chambers to decide trade policy, not the President of the United States?
Yes, ma'am, but we have continuously sold out the American worker, and that's why you've seen labor has endorsed a Republican president's ideas, because so many times we've been, it's hard to compete against slave labor. And then when they add the tariffs, as again, I remember when I owned stock in Harley Davidson and they went to China, and everybody said, oh, this is the greatest thing in the world. China's opening up to their markets. And the reality was they were just wanting more products made in their country. And we're only selling to high-ranking officials. And that's the kind of thing we're up against. And politicians, they celebrate bringing in foreign investment into our country when we put limits on our own country. So I think Trump sees that, and he sees the nature of Congress in both parties. And frankly, we're not going to see much change. We're ready to go to war over Ukraine, but China has been doing much worse in the world economically and just by being bad actors and other, like to the Uyghurs, but you don't hear anybody wanting to talk about going to war with China. And this is all money, ma'am. That's all it amounts to. It's investments, it's greed by Congress, and Trump called it out, and this is the result.
Well, the example that you cited of Harley Davidson was targeted. This across-the-board approach, Congressman, as you well know, you hear all the arguments probably before we do, could increase prices for a lot of consumers on a lot of products. Do you actually believe in the near term this is a good thing for constituents in your district?
In the short term, there's going to be some pain, but I think in long-term effects, no. I think it's going to be overall a very positive effect. More American jobs, more products. Chips manufacturers moving in here. We're seeing car manufacturers already talking about it. You've seen people like Israel, Vietnam, all these other countries have said, hey, we're going to take the tariffs off if y'all take the tariffs off. So I think overall it's going to be a positive thing, but there's going to be a little bit of pain, but it's due to Congress. And you're right. I am part of Congress, and we've done a terrible job. We've sold the American people out, and Donald Trump is calling us on the carpet for it.
Well, Donald Trump is going to need you for what the White House is calling the next phase of this, Congressman, because tariffs may be part one, but they also want tax cuts to come down the line. They say that these things need to be viewed as happening in tandem rather than separately. The Senate is getting ready this evening and tomorrow to advance a budget blueprint that is a little bit different from what you and your colleagues passed in the House, would raise the debt ceiling by $5 trillion. The spending cuts are lower than what the House plan has called for. Is this something that you think you could stomach to vote for?
Anytime you cut taxes, it's something I'm for, because people aren't just shoveling money under their bed. They're going to put it in a bank. They're going to invest it in more businesses. They're going to do better. The American public's going to do better, and I firmly believe in that. And I think that's what President Trump is enabling us to do with this. And so I support it. There's going to be, like I said, there's going to be some pain, and people are going to be wringing their hands. They'll get 3 calls from home, and it'll be a groundswell of support, and they'll turn on the president. But I don't plan on it. I think he's doing a great job. I think this is what this country needs. It's going to take a little bit. We've sold our country out every step of the way. It seems like Congress has, if you dig deep enough. And this is a president that has said enough is enough. He's going to stand with America. And I think, dadgummit, it's about time Congress does.
Your colleague from Louisiana in the other chamber, Senator John Kennedy, said earlier today, Congressman, tariffs are a little like whiskey. Under the right circumstances, will refresh you. Too much whiskey, the wrong circumstances, will make you drunk as a skunk. So where's the limit?
I don't know. Well, I guess If you ask the economists, it's anything. They're all wringing their hands right now. And you ask Congress after they get 2 phone calls. But right now, I think we're just going to have to roll up. We're going to have to take some heat because we have not made the proper decisions in the past. We have continuously sold us out time and time again. We've allowed China and other bad actors into our economic model, and they cannot live without us. And we're going to learn how to live without them. And I think that's what Trump realizes. And I'm glad for it. You know, you're talking about Mexico, you're talking about China, you're talking about Canada. The fentanyl issue affects all 3 of those. There, we know that it comes over. It's produced in China, and it comes over our southern and our northern borders. And yet we are seeing very little enforcement. And this is another factor, I think, of this that we're not paying attention to. We've lost more people to fentanyl than just about anything in recent memory. And I think President Trump realizes that, and he's saying enough is enough. The economics doesn't matter if somebody loses a kid.
Well, Congressman, speaking of kids, you were one of 9 Republicans in total, including Congresswoman Anna Paulina Luna, who voted down the Speaker's attempts to get around the discharging of essentially a discharge petition to make proxy voting accessible to new parents in Congress. The Speaker sent everyone home as a result of that failure. How are you expecting, or how do you hope he handles that when you return to Washington next week?
Well, it could have been done a lot different, ma'am. They could have put the rule on individual bills, but they chose to and I think strategically, I don't blame the Speaker. There's a lot of moving parts. There's a lot of members that have been real negative. But the Republican Party is supposed to be the party of family values, and it is different. Women, there are 2 sexes. Women have babies. That is a fact. In the history of Congress, we've had 13, now 14 with Kat Kammick, female members of Congress who have had babies. We have, I believe, 3 Republican men whose wives are pregnant. Now, imagine if all those are out at the same time and we lose our majority. That's what could happen. I think we better, and President Trump is correct in endorsing this plan. I believe, once again, the president has showed some guts and some leadership, and he's going to stand up for ladies. And that's exactly what we did, and I think that's what needs to be done.
All right, Republican Congressman Tim Burchett of Tennessee, thank you so much for joining us, sir. We appreciate your time. And now joining us for more is this evening's political panel. Matt Gorman is with us, Executive Vice President at Targeted Victory and Republican strategist, alongside Democratic strategist Christy Setzer, President and founder of New Heights Communication. Welcome to you both. I want to begin our conversation where we began the conversation with the congressman, which was on the subject of tariffs, obviously, given the news flow.
Oh, what's going on?
Matt, I think we're all aware. It was a pretty ugly day on Wall Street. The president is standing by this policy. My question is, for how long can Republicans, whether they're Tim Burchett or others, stand by this policy if it starts to hit people in their districts, in their wallets, and they start to hear about it? Could this go south?
I think if you're counting on the Trump administration to back away from this policy anytime soon, I think you're probably imagining things. And I would step back a little bit. I think this is beyond tariffs. You're talking to a group of people in the Trump administration campaign, and the people who have been really around him, who since 2016, I think, on many things, right? Whether it's 2016, the indictment over the last couple of years, January 6th, who've been told, count it out, who said, that this is not, like, you're politically dead or you're done. And so they've internalized this thing. And I think the more they see negative, the more they see the bad things, people counting them out, economists saying this is not going to work, I think in some way it sets them even stronger on this course. Obviously, same can't be said for members of Congress to face voters next year, but they fundamentally believe they're remaking the American economy, and they're going to be relentlessly stubborn about changing course.
Does a market falling out of bed make them feel the same way?
But what I would say is, today as opposed to 3 weeks ago, I think that is something that if this was going to be, the ship was going to be turned around, it would have been turned around weeks ago, not all of a sudden today.
So is this a moment for Democrats to take advantage? Christy, if there is no turnaround on these policies, what opportunities does it open?
What's been surprising to me has been some of the just wildly out of touch and frankly downright callous statements that have been made by both President Trump and members of his administration. Not just this talk about that there's going to be short-term pain, which, by the way, is very different from how he talked about it on the campaign trail. This is new after he's continuing to be told by economists and pretty much everybody in both parties that this is going to cause a lot of pain for regular Americans. But what they seem to be forgetting is that presidents lose when they come across as wildly out of touch on the economy. I'm old enough to remember, actually, that George H.W. Bush lost for that exact reason, like leading to Bill Clinton saying, "I feel your pain" on the economy, right? So, I don't know if they're going to change position here, but there's certainly an opportunity for Democrats to take advantage of it. And, if I were, there should be an entire war room of Democratic operatives right now creating ads based on not just the comments from Trump and from Howard Lutnick, but from a number of members of Congress who keep talking about the sort of the short-term pain and how we need this, while a ticker of the stock market, keeps going down, plays in the background. That's what I would do.
Donald Trump today on Air Force One says he hasn't checked his 401k today. I didn't realize he had a 401k. The problem is a lot of Americans did.
Yeah.
As painful as this is that the path to victory in the midterms?
That's one of the paths. But again, it's probably bigger than that. But that is for sure the biggest part of it, is talking about, that he is, again, just so out of touch. And this was so needlessly done, too. The fact that before Trump, we actually had a really good economy going, that this is a self-inflicted pain. It does nothing but anger global partners and make regular people take it on the chin. So I would say, again, this is absolutely the message that Democrats should be pursuing.
Well, it wasn't just the 401k comment that the president made on Air Force One. He also signaled that he may be open to negotiation on these tariffs. This is what he told reporters.
It depends. If somebody said that we're going to give you something that's so phenomenal, as long as they're giving us something that's good. For instance, with TikTok as an example, we have a situation with TikTok where China will probably say, we'll approve a deal, but will you do something on the tariff?
Obviously, it's a little bit hard sometimes to hear over the roaring of the engines of Air Force One, but he suggested negotiations could happen if a country, or a deal could happen if a country offers him something phenomenal. Matt, do we have a sense of what his view is of a phenomenal offer? Is it anything other than no tariffs on U.S. imports?
I mean, well, I thought Scott Bessent was setting the table for this in interviews last night, whether it was here or in other shows as well, right, when telling people to take a step back, take a breath. I think, that is what they're hoping for from at least a couple countries, and seeing if they can de-escalate some of this. I think with Trump, as we've learned, everything is negotiation. Everything's on the table in a vast majority of things. So I would not be surprised if we see certain countries come to the table, whether it's China, maybe even the UK or other ones, and try and de-escalate in some areas.
And the president says promises made, promises kept. Would he be right?
I think that Democrats at least should be pointing out how much these negotiations tend to favor him. Why have there been no tariffs on, Russia? Why, in fact, are we trying to put tariffs on the penguins up in the Arctic, right? Again, it just sort of shows that there's no real rhyme or reason behind of it. It is this misguided view of this as strength, right? And I sort of agree with Matt that that the Trump administration sort of goes by the motto of, often wrong, never in doubt. But I don't know that is going to play out well for them.
Well, the other thing the administration is saying today is not only that we have to think about tariffs as short-term pain for long-term gain, but we also have to think about tariffs as just being part one, part two being big tax cuts that they're hoping will be passed by Congress by the end of this year. How hopeful are you, Matt, that is going to have a quick resolution? If we're starting to feel the effects of tariffs now, how long will it be until people can feel the effects of that policy that's supposed
look, it's April 3rd. I mean, we're already kind of proclaiming the midterms over, right? We haven't done that. The whole point of, I think, why legislation is so important is because it's much harder to have go places when other administrations take office, right? It's stickier. So that's why this reconciliation bill, this big, beautiful bill, as they call it, is going to be so important, because you're right. It'll hopefully offset some of the short-term disturbances, as they call it, in the market and in your pocketbook. And I think also can set the tone for what they hope will be a more successful midterm. So I think that is a really key, and that's why it's so important that you see the Senate and the House really getting going and momentum on this, so this doesn't lag into the summer and really almost start to kind of concrete into conventional wisdom that things aren't as good as they might be.
Will Republicans play any role in this reconciliation process, Democrats rather, with Republicans, or this is one side of the aisle only?
You know, I think it's one side of the aisle only, and I am hopeful based on Cory Booker this past week, right? Look, obviously his 25-hour filibuster is not everything. It doesn't totally change, and in fact, it didn't even change the very following vote, right? I'd hoped that it would at least make other people stand up. But it is a continuing show of Democrats willing to stand up. It's a slow, sort of building of resistance that has been playing out, obviously, at the ballot box this week, too, in Wisconsin and Florida, right? So I think that those things combined hopefully will give Democrats the ability to say, no, we're not playing on this.
Great conversation with Christy Setzer and Matt Gorman, our panel this evening. We thank you both so much. Coming up, we'll look ahead at tomorrow's jobs report. It's going to be an important Friday in the nation's capital and on Wall Street. It's next on Balance of Power on Bloomberg TV and radio. This is Balance of Power on Bloomberg TV and radio alongside Kaylee Lyons. I'm Joe Matthew in Washington. Thanks for being with us as we look ahead to another big one tomorrow. I feel like I say that every day, but it's, of course, Jobs Day, continuing claims in the U.S. We already know rising to the highest level since November 21. Let me just tell you, the jobs report comes out tomorrow at 8:30 tomorrow morning. What's the estimate, Kaylee?
140,000 on non-farm payrolls. The unemployment rate expected to stay steady at 4.1%. The thing is, for financial markets, which ended the day on Thursday in a pretty vulnerable position, does that make the economic data tomorrow all the more important? Or is it actually the words of Chairman Powell after the data and after the tariff announcement that will ultimately matter? Because once we've gotten the data in hand, just 3 hours later, 11:35 a.m. Eastern time, Chairman Powell will be speaking.
We'll carry those remarks on Bloomberg TV and radio, and we'll meet you back here after 12 noon on Bloomberg Radio and on YouTube for the next edition of Balance of Power. Meet you back here at 1 on Bloomberg TV.
And in the meantime, you can check out the Washington edition newsletter, and we'll see you tomorrow. This is Bloomberg.